Hello everyone, welcome and thank you for joining us today. My name is Grant Smith and I'm the Communications and Conference Manager at Connecting Up and TechSoup New Zealand. Connecting Up and TechSoup New Zealand are a part of the Info Exchange Group, which is a not-for-profit social enterprise that tackles the biggest social challenges through the smart and creative use of technology. For those of you who haven't attended a webinar session with us before, Connecting Up and TechSoup New Zealand facilitate an annual training calendar of online webinars, workshops, boot camps, and webcons to help the social sector upskill in all things digital. So whether you're learning how to work effectively in Office 365, or you're creating a digital marketing or social media plan, or something else, that's the kind of stuff that we help you with. We update our training calendar monthly with a variety of free and paid for sessions. Please check out our training and education menu on our website if you'd like to find out about more events which are coming up online. So I'd like to welcome you all today to the webinar Refreshing Your Management Reports with Mick Devine, the Director of Calxa. Calxa is an intelligent software solution that saves time for businesses, not-for-profits and accountants by automating your budgeting, cash flow forecasting and KPIs, and it does it intelligently. Before we begin, we'll go through some quick housekeeping. So all of the lines are muted, which means that if you have any technical issues, please type those into the questions box on your webinar panel, and I will help you with those as they come in. If you have any questions during the session, please also type those into the questions box, and I will read those to Mick during the session. We'll have three question and answer sections with the largest one at the end. So please do send us questions. Please note that your comments and questions will not appear to the entire group. And note that if you are on a Wi-Fi connection and you have multiple programs open and this is a bit crackly or freezing right now, this may well be because you're using too much of your internet bandwidth with other programs. So please close anything else down that you're not using, and that will hopefully fix most of the issues. If that fails, please exit and re-enter the webinar and check that you have the correct audio and video connections in your settings. And if that all fails, then definitely please do message me through the questions section. Please note that this webinar is being recorded, and a link to the recording and the slides will be sent to you as soon as we can after the webinar ends. Before we start, I'd also like to remind you that there will be a short survey at the end of the webinar. These are really important for helping us to improve our sessions, so I'd appreciate it if you would fill that in so that we can pass on any suggestions to Mick. So that is everything from me. I will hand you over to Mick. Thanks, Mick.
Thanks, Grant. Welcome, everybody, and good morning. So what I want to talk to you today about is just having a bit of a different look at your management reports. And on the one hand, I do think there's a benefit to consistency in the management reports. I might just turn off my webcam to just improve the bandwidth there, and let's see if that helps at this end. So as I was saying, I think there is a benefit to consistency in management reports, in giving people the same or similar reports month after month after month, because then you do get familiar with them. You do notice when something's different. It's about, you know, understanding where things are. You go looking for things. You notice when something's out of place. You notice when a number is significantly different to normal. But having said that, I think sometimes people can get complacent with getting the same reports month after month. They start to just gloss over them. They don't pay attention to the detail. They think, okay, I've seen this before. And, you know, when you're presenting management reports to people, you want them to read them. You want them to understand them. You want them to use them as part of the decision-making process. Otherwise, why go to the trouble of preparing them? So I've just got a few suggestions this morning on some different types of reports, some tips. I've created my samples for today out of Calxa, but that's not necessary. You could do the same thing with a spreadsheet. You could do it with other reporting tools. So how you produce them is independent of what you produce, I guess is what I'm saying. So maybe let's have a look and see what I've got. So I think one of the important things to start with is visualizing your reports, especially when you're presenting to board members, people who may not have a financial background. And in my experience, there's a lot of good people on not-for-profit boards around the country, around the world, who don't necessarily understand everything about accounting and finance, and often feel overwhelmed when you give them too many numbers. And I've been on boards where you get presented a wad of reports that are just printed straight out of MYOB or something, and you're expected to read through them in half an hour before the board meeting starts. Pictures, as they say, tell stories differently. So I've got some examples and some suggestions, and let's have a look, have a talk about them. And if you have questions, happy to go through those. So one of the first KPIs I regularly use for cash management is cash reserves in days. And the idea with this, before this year, it used to be a very theoretical sort of KPI. The idea is that if your revenue dried up tomorrow and you still had to keep paying your expenses, how long would you last before you ran out of cash? And nobody ever expected that your revenue was going to suddenly, without warning, dry up. But we all know that for many organizations, that's exactly what happened in March, April this year. So I think that brings home to us the importance of A, having some cash reserves, and B, knowing how long they'll last for you. And this has happened, I think the ones we see around the streets are the restaurants, the cafes, etc. But also in the not-for-profit sector, a lot of arts organizations that are funded mostly by ticket sales, sporting clubs that are funded by membership subscriptions. The members stop turning up, the tickets don't get sold, you've got no income. How are you going to survive? So being aware of how many days cash you've got, I think is a really important insight into the sustainability of the organization. And traditionally, the general benchmark has been if you've got 90 days, that's good enough, and you don't need to worry about it. I mean, in my sample file here, we've consistently had 250 days for the last 12 months. I mean, I think it's also worth watching this not just at a particular point in time, but as a trend. How's that been changing over the last 12 months? Are you growing your reserves? Are they declining? Those sort of things, so that you're aware of what's happening and you can take action to change things if you need to. And I think it's one of the key things about management reporting generally. It's about driving change in the organization and helping people with decision making. So I'd question now whether 90 days is enough. I'm sure there are people who closed down in March who aren't back up again, and won't be for some time yet. So, you know, it's a judgment call to make, but just having that number there month after month so you can see how it's growing, how it's changing, is really important. And the quick version of how to calculate it, and I might add some, I'll give you this set of reports afterwards, but I'll add in some of the formulas for some of the KPIs that I've used as well. But basically it's your average daily expenses. It's your cash balance divided by the average daily expenses. So work out how much your expenses are each day and divide that into your cash balance. And I think also looking at the physical bank balance in the organization over time and seeing the trends in that is useful at a management level. I mean, it's simple stuff in terms of putting together the numbers, but it's also useful stuff. I mean, I've known people who manage their whole cash flow just by, have we got money in the bank? Yes, therefore we can spend it. And I think it wants a more sophisticated response than that. So I don't think that cash balance on its own is important. But looking back at the trends, and has it been increasing? Is it stable? Is it decreasing? Is something that can alert you to upcoming problems in the organization. So I usually, and I've done this one quarterly back for the last 2 years. I think if you're doing a report over 2 or 3 years because you want to see the long-term trends, I think quarterly works better than monthly. I'm just been asked to reduce the resolution to see if that fits on the screen a bit better. See if that helps. Let me try that without making it too small. Try that, see if it helps, and let me know if it's still off the edge of the screen. So I find for those long-term 2 to 3 year reports, quarterly numbers work better than monthly, because otherwise it looks too crowded, and you want people to be able to see things clearly. Expense breakdown. You can give somebody a profit and loss report and show the expenses. Even if you summarize it and just show the headings, they can still see the numbers, but I think there's something about a chart, and I think the stacked bar chart works well for something like this, where you want to see the breakdown of what's comprising those different expenses, what's driving the ups and downs of them. And you know, in this one, you look at it and you see our major expenses in this organization is staff costs, and that's typical of most not-for-profits, because by nature we're service organizations, yeah. But then, you know, how much is admin? And in this case, it's fairly consistent from month to month, but it's gone up in July. And for some reason, we didn't spend much on operations and marketing in July, and the office expenses decreased. But it's being able to spot those increases and decreases that I think a chart brings home to you, and also lets you see trends that happen. You can see the seasonality of the business better in a chart like this than you can just looking at the numbers on a page. the bank movement waterfall, I like this one for showing the cash ins and outs of a business, because I think it illustrates nicely the relative importance of different sectors. So if I just take you through this, we start with the opening bank balance, and essentially each column begins where the previous one ends. And then we add in our first income section, which is grant funding in this case. And then we add in our next one, which is services. And then we start taking off purchases. We take off admin, we take off office expenses, we take off marketing, and staff costs is the big one to come off. And then operations. But it's also important to include the balance sheet movements in here as well. We haven't got much movement in debtors and payables here, but we have got some fairly significant outgoings in tax and super, and then we get to the bank at the end. So it's, you know, a simplified version of what accountants would call what they used to call it in the olden days, a fund statement of funds, that sort of thing, where you're showing what's going in and out of the organization. But I don't need a degree in accounting to be able to look at this chart and see where our major sources of income are, what our major expenses are, and outgoings. So I think it's about presenting people with that information in a way that makes sense, and especially for the non-accountants. When we're delivering financial information, and a lot of management reporting is about financial information, it needs to make sense to people who aren't necessarily accountants. So let me see if I can line this up. Excuse me. Cash flow projection. As well as looking back at what the bank balance has been for the last month, 12 months, etc., I think it's vitally important that we look forward to see what the bank balance is likely to be over the next 12 months, and possibly longer, depending on the type of projects that you work on, the type of organization you are. You know, we all have slightly different time scales, where for some people 6 months is a long time. Others work on projects, and you know, you might have a 5-year funding stream for a particular project, and then it makes sense to look at a longer term, take a longer term view of that. But 12 months is a good time scale for most organizations. And by looking at this, I see that my predicted bank balance month by month, and I see this big dip below zero in October, and then we sort of scrape along from there, and it's dipping again in March, April, before recovering. That's the sort of information I want to see as a board member. You know, I have a responsibility to make sure that the organization's not trading insolvent. I want to know that we have funds when we need them. And my finance person's added a little note at the bottom here saying the vehicle loan fleet residual payments are due in October. Refinance? Question mark. So I can see the different bars here tell me the different components of what's going in and out. So green's income, blue's expenses, the pale blue's asset purchases, the red's liability. So in this case, from the note, I know that this is a whole lot of residual payments on the vehicle fleet. So it's liability payments, it's loans that we need to repay or refinance. And I would be probably looking at that and saying refinancing that would make sense, because if we can refinance a chunk of that repayment and pay it gradually over the next 12 months, then we can probably avoid this downturn as well. And those are the sort of high-level decisions that you want to be involved in as a board on the funding of the organization, on where it's going. You don't necessarily need to care about, you know, how much we're spending on postage stamps. Do people still spend money on postage stamps? Maybe I need to pick a different example, but you want to know that the organization is solvent, even if funding is needed at some point. You know, there's a short-term overdraft requirement. You know, even in this period here, we know that for a short period of time there, we'll go into overdraft, but we'll recover and repay it fairly rapidly. By having that forecast, you can make those decisions and know what's happening. I wouldn't like to turn up at a board meeting after the end of October and be told we've repaid these loans on the vehicle fleet and now we don't have any money. That's not what you want to see. So I think it's vitally important that we all look ahead. Now, does anybody have questions before we move on to the next section?
No questions just at the moment, Mick, but okay. Guys, please do ask questions and take advantage of Mick's expertise. I would encourage you to. Aside from that, I guess we carry on, Mick.
Okay, I'll keep going. I'll keep talking until you tell me not to. Okay.
All right, I will do. Thanks, Mick.
So as well as visualizing data, I also think it's important to summarize it, because as a senior manager, as a board member, you want to have enough information to make decisions so you know what's happening, but you don't want to get drowned in data. You don't want to have to spend 2 hours pouring through a set of reports to understand what's happening. You don't want pages and pages of information. And there's a fine line between enough to give you the information so you can make good decisions and so much that you're swamped. And I think that does vary depending on who your audience is. Before I carry on and show you some examples of the next reports, Grant's got a question for me.
Okay, I actually have a couple, which is great. So Doug wants to know, what about beyond financial reporting, balanced scorecard, etc., service delivery? So I think he's asking, yeah, what about beyond financial reporting, things like balanced scorecard and service delivery? If that's not right, Doug, just correct me.
Yeah.
But I'll leave that one with you, Mick.
Yeah, I think it's important to give a rounded view of the organization to your board, to senior management. And I have focused on financial stuff very much today because that's the information that I've got easily available, but there is that non-financial element to what happens with the organization. And I think it's how you present it follows the same sort of rules. It's just you've got a different subject matter, different source of the information. But I think you're right, Doug, that just the finances alone don't tell the whole story about what's happening in the organization. You do want to know what's happening with clients. You do want to know what's happening with your members, depending on the type of organization you are. You do want to know about the impact that you're having on your community. And a lot of this information gets collected, but I think again it's a matter of finding a way to present that in a way that makes it clear to the board members, to the senior management, what's happening. And I think trends, are we improving increasing our impact on the community, or is that going up and down? If we're a membership organization, how are we doing in terms of member numbers? Are we gaining members? Are we losing members? And what are the reasons for that? And I think often that stuff wants some commentary with it. It's not just the numbers, but I think that makes sense. Did you have another question as well, Grant?
The Doug just added a little bit that I think you might have already covered, Mick.
Okay.
Is it all about asking the right questions? For example, are we viable? Are we delivering? I think that's what you were touching on, but you might want to add to it.
Yeah, I think it's very much about asking questions, and I think it's about making people think. It's about, and I think that's why I think that the danger with just presenting the same information month after month is that people get complacent. They look at it and they think, oh yeah, that looks pretty much the same as last month, and they don't spot the differences. And I think it is about being able to highlight the changes and making them think about what's happening with the organization, so they're aware and can respond to problems before they happen. Okay, summarizing data. And I find, particularly when it comes to looking at the different programs or activities that happen in an organization, I've seen so many examples where people give detailed profit and loss reports on every single project to senior board members, and most of the time I think that's unnecessary. So I think it's about finding ways of organizing that data and arranging it so that you can get a quick snapshot. I mean, this one, for example, lists all my different projects and shows me income, expense, profit, budget, and actual for the month and the year to date. I mean, I've run it for July, and I'm on a July to June financial year, so year to date's the same. But I can quickly look down here and I can compare the actual profit with the budgeted profit and know which of these projects are on track, which ones aren't. And then I might ask questions about the ones that aren't on track, but the ones that look okay, I don't want to go into the detail on those. I can put those to one side and focus on what's actually happening. You know, this project here has got no actuals at all in July. What's happened? I'd expect someone to tell me a story about, you know, we expected this project to start in July, but you know, it's been postponed until September or something, and therefore in our next version of the budget we'll adjust that accordingly. But it's by having that summary information at the project level and not having to look at the detail, I think it gives you a quicker snapshot of where we are and what we're doing. And then those of you who deal with multiple branches, and so not so much projects within one organization, but essentially multiple branches, multiple companies, depending on your structure, you want to see that same level, that same sort of summary at that company level. And that's what I've done here. And then this one I've just got a slightly different view, just giving a bit more information, showing income, cost of sales, expense, so a more summarized profit and loss, but going across the page so we can do a quick actuals and budget for each project one by one. And I think by summarizing that information, you help people digest it and don't drown them in stuff that doesn't make sense to them. Any more questions there yet, Grant?
No questions at the moment, Mick, but Ronnie has commented that it has been a very valuable presentation thus far, so that's good to know. Thanks for that, Ronnie.
Thank you. Thank you. I'm flattered. Now, after spending the first half hour telling you about how you should group things and summarize things and get rid of the detail, there are times when the detail is important, and I think that especially comes when you're comparing different things, you're comparing different projects, you're comparing different branches. And so my next couple of examples, I might make that one a bit bigger. Let's see if we make that a bit bigger for you. So I've got my 5 different departments here, and then a summary of them on the right hand side, and I'm looking at them line by line, and I can quickly see which one's got particular types of grant funding, which one's got donations, total income for each one, and really looking at the detail lines, but having something to compare it to. I find often when you look at financial reports, they lack context. And I think by putting things side by side, I mean, sometimes we do this by showing this year compared to last year. Sometimes we do it by showing this month's budget compared to this month's actuals. And I think those are perfectly valid ways of comparing things. But as I said, sometimes you want to do things a little bit differently. And so what I'm doing here is showing these different, similar but related projects, grouping them together so that you can see which ones are doing well, which ones are not doing so well, and then prompt some thoughtful questions from your audience about why that's the case. You know, why are the staff costs so much higher in this project than the others when the revenue was fairly similar? Those are the questions that you want to ask, and there may well be valid reasons for that, but it's the sort of thing that as a manager, as a board member, I want to know, you know, if we can do things well in one area, why can't we do things well everywhere? And by doing this sort of comparison, you can see just in that snapshot where we're doing well, where we're not doing so well, and then maybe where we need to focus our energies on improving the organization. And again, if you've got multiple branches that are in different locations, you might want to see those different companies side by side and see, you know, is one shop doing better than the other shop? Why is that? Is it just because of the region it's in? Those sort of things. It's fairly similar to the other one, so I'm just going to skim over that one. And then balance sheet. Even non-accountants should look at a balance sheet occasionally. Maybe not all the time. But again, I think a balance sheet benefits from comparison. For my sins, I am an accountant, so technically I should be able to understand a balance sheet, but on its own, in isolation, when you just pick it up and you look at it, it doesn't always mean a lot. It's, again, when you compare it to something else, that it starts to make sense. And as I said, sometimes that comparison could be, how does it compare to the previous year? How does it compare to the beginning of this year? How does it compare to the budget? But also sometimes, how does it compare to another organization? And, you know, I've got 4 organizations in this group, and I look at the balance sheet for each of them, and one of them manages to accumulate twice as much cash as the others. Why is that? Have they been going longer? Are they in a different area with different type of clientele? These are the questions, you know, is it different management practices? Have they focused on building up cash reserves, whereas this one here hasn't, or this one here started more recently? These are the sort of things to ask and to understand. And, you know, depending on the nature of the organization, you know, I've got some fairly high accounts receivable values here. Why is that? Because we're sending out invoices to our clients, and more not-for-profits are in that invoicing position these days, where, you know, you are funded by invoicing for services, whether you're invoicing government, whether you're invoicing individual clients or other organizations. So those are things to manage. And then, what are the fixed assets that each organization has, and how are they being managed? And then the liabilities. What does each organization owe? How does that compare? And again, I find comparing that from one organization to another, you know, which ones are having trouble paying their GST, which ones are on top of that sort of thing. And those are potential warning signs that there's some financial trouble there if there's outstanding GST, super, that sort of thing. And as a board member, you want to know about those. So keep on top of them and do those comparisons. And KPIs as well, also I think benefit from context. You know, I've just got some fairly standard accounting ratios here of gross profit margin, net profit, just because I didn't have any interesting ones set up across all my organizations. But this could be also some of that non-financial stuff that Doug was asking about earlier. You could have numbers on, you know, gain in membership, loss of membership, ticket sales, environmental impact, those sort of things, different scores for different non-financial information that you bring into your KPI reporting. And I think it's comparing them across different projects or departments within your organization, or different organizations within your group, or if you can get other organizations outside your group to share them. I mean, back in the days when I was an accountant, and I was young then and working in the hotel industry, and every morning we used to have a phone around of all the competitor hotels where we would exchange figures on occupancy and average room rate for the previous night, so that we knew how successful we'd been compared to the others in the region, and we knew how which hotels were doing well, which ones weren't doing so well, and that helped in our decision making about what we did to attract the next lot of customers, etc. So if you can get some comparative information from similar organizations, it doesn't make sense to do it with organizations that are totally different to yours. But if you can get those comparisons from other organizations and incorporate them into your reporting, I think it really adds value and puts some context about, how do you know that your numbers are good or bad if you're just seeing them in isolation on their own? How do you know whether they could be improved? Yes, theoretically everything can be improved, but if you're far and away the best at something, you've got less scope for improvement than if you look at the other comparable organizations and you see that they've all got far better scores in a particular area than you have. So I find that comparison and context really good for any sort of KPI reporting, whether it's financial or non-financial. And that's the end of my list there. So do we have any more questions? Somebody who's got some final questions to make us all think before we go home?
You're doing such a good job, Mick, that you're answering all the questions before they've arrived, I think.
Surely not. Surely not.
Nothing in the queue at the minute, so I would encourage everybody, please do take advantage of Mick's expertise. Pop a question or two into the questions section.
Yeah. So just to summarize, I think as I said at the beginning, there's a benefit to consistency in the style and format of your monthly or quarterly management reports, but I also think it's good to add something different every now and again, just to make your audience look at things differently, think differently, and make better decisions, because that's the whole point of management reporting. And just because I had 20 reports in this list doesn't mean you need to. I'm suggesting that you need exactly those 20 reports every month. You need you got to choose what you need makes sense for your organization. Grant says he's got a question for me.
So Ronnie is saying, I'm assuming that Calxa taps into our existing MYOB file and provides reports that aren't available in MYOB with question marks.
Yes, is the answer to that. Calxa connects to MYOB, Xero, and QuickBooks Online directly. If you're using another accounting system, you can create a manual organization in Calxa and import actuals from a spreadsheet, but it works best when it's connected directly to one of those three. And yeah, we've spent the last 10 years trying to build a reporting system that will give you much more flexible and easier reporting than you get in your accounting system. I mean, the accounting systems have good reporting for the compliance stuff. They're, if you want to know how much GST to pay, that sort of thing, if you want to know how much you've spent on payroll and who got paid what, the accounting systems are good at that. But I've never found one yet that's really good at management reporting and giving you information to help you run the business. Yes, they've got the basics, but you know, if in my experience, people who are not using a tool like Calxa are doing a whole bunch of stuff in a spreadsheet, and that's fine and flexible, but it takes a lot of time.
That's great. Ronnie just said he added to that, if so, it doesn't really change the way we operate, but just provides extra reports. Would that be right?
Yeah, that's right. That's right. We don't put anything back into the accounting file. We just pull stuff out, and then for the quick 30-second overview, pull the information out of the accounting system, do your budgets within Calxa because we provide more flexible budgeting, and then out of the 150 different report templates we've got, you put together a bundle of reports for each audience. So it might be one for the board members, one for the CEO, different one for the treasurer with a bit more detail maybe. But once you've put those report bundles together, it saves all the filters and configuration. And so, you know, this set of 20 reports here, I produce that with just one click once it's all set up. So a little bit of thinking about what are the right reports for each person and what do they need. If you're interested in having a look at Calxa, there is a free trial on the website, and we do a donation for small and medium charities. So, turnover of less than $1 million. Talk to our friends at Connecting Up and TechSoup. They manage that for us. And if you don't qualify for the donation, they can organize you a discount as well. So that's the commercial plug done, but thank you, Ronnie, for asking the question.
Thanks for that, Mick. No questions in the queue at the moment. Is there anything that you want to add to that, Mick, or anybody who wants to add another question or two? Please go quickly. No, I'm just want to thank everybody for turning up today, and I hope you found it useful. I will provide Grant with a PDF of the reports, so you've got them for a bit of reference afterwards. And my details are scattered around the Calxa website. They're probably on the Connecting Up website somewhere as well. Happy if you want to email me and ask questions afterwards. No problems. Fantastic. Look, thanks so much for that, Mick. It's really appreciated. And I'd like to take the opportunity to thank everybody who has joined us today. Thank you for your questions, and thanks for tuning in. I hope that you've all learned something from the presentation and that you've got what you hoped from it. Can I please ask everybody again to leave your feedback for us in our post-event survey? And other than that, I'd like to wish you all a fantastic and safe day, and we will look forward to seeing you again sometime soon. Thanks, everybody.